Hi guys, welcome back to the Wall Street educational series from me, Mukris Magsor of Mukris Trading, and of course, with my one of my other companies doing it with Condonomics that also do educational series around this region, Brunei, Singapore, and Malaysia as well. And of course, this time around, I would like to share something that is I feel is very important as well because I usually and frequently I use this kind of technique in order for me to identify which level for me to enter the market or when to exit the market. This is pretty simple actually, and with the main subject of this YouTube, that is support and resistance as simple and powerful technical indicators, is actually is very simple and very powerful, and it has been there for so many years, and it's very powerful. I think most people or most traders feel that it's so simple they ignore it. Actually, the simple the trading strategy, the simpler the trading technique, it will make more money in the stock market. Not just the stock market, but of course all other financial market. Even you can use it on commodities trading, futures trading, even on currencies, cryptocurrencies, everything you can use it. It can be applied universally to any other financial instrument as long as it is a liquid financial instruments. Now, without further ado, let's go into the screen and see how support and resistance plays its part in the financial market. As an example here, I would like to show the support and resistance that has been created by the price action on Facebook. Okay. Right. Price action, of course, is very important uh, in the financial market, and of course, it needs to be supported by the volume. So that's why it's very important for us to understand first before we use the support and resistance. We must understand the use and the importance of price action. Price action here is being represented by the candles or the bar. And then of course needs to be supported again by the volume. Okay, together it will work in tandem. It's a very perfect kind of analysis in the technical world. Okay, all right. Now we go into how the support resistance can be created. As as we can see here, the support here on the Facebook as of in April of 2016, the support is being created here. Now, how do we identify the support? Support is where a place that the price will not go much further down further. Okay, it won't go much further downward. That is where the support usually created. Then we need to identify where is the resistance. Now, resistance in a simplified form is where the price is heading up and then it didn't go up again. Okay, it somehow it stopped there temporarily. So this is where resistance can be created. Okay, that is where the resistance can be created. Now, as you can see here, the support seems to be a very strong support where the price action, the candles represented by the candles here, never went below the support. But it seems to be that the bull is now in control because it break the resistance. Okay, whenever it break the resistance, it technically means that potentially the bull is in control. Okay, the bull is in control of the particular instruments, or if you want to relate this to the index such as S&P 500 or the Dow Jones or the Nasdaq, the same thing happen. If you want to see if there is a bull in control or the bear is in control, whenever the price break the resistance, the bull is in control. But whenever the price break below the support, then there is a tendency or there's a potential that the bear is in control. In this case, the bull is in control. Then as you can see here, whenever it breaks, okay, whenever it breaks the resistance, we need to understand, we need to find out that if there is a volume that can support such push upward. In this case, as you can see here, when it break this, when it break the resistance here, the the volume is a little bit less. It's a little bit less, but as you can see, the day before that, okay, the day before that, the volume is higher than previously. So this is a good indication that this will not become a fake breakout. Okay, will not become a fake breakout. So you can enter the market. This is how I usually see a particular instrument, whether there is a fake breakout or a valid breakout. A valid breakout usually associated with a stronger volume. But if the breakout towards the upside or the downside, if it is not being supported by the volume in a higher volume than the previous day, then there is a high potential that such breakout will become a fake breakout. Okay. Now, as you can see here, after it makes such a move, and then after that it will rest below the resistance, which is now become the support. Okay, whenever price move beyond resistance, and then it comes back below the resistance, it becomes a support. Okay, now as you can see here, there is a tendency, or there is an action, price action here, whereby the price stop going upwards, and that is where a new resistance can be plotted. Okay, this is the new resistance that can be plotted. Okay, can be plotted. Now what happened next is that, okay, next the price breaks such resistance at, supported by the volume. But what happened is it moves sideways. Now, you might be asking, just now I refer or told you that, tell you that every time the price break above the resistance, it must be supported by the volume to avoid fake breakout. But what happened now? It moves sideways. Okay, now you all must understand that any technical indicators, any analysis is not 100% guarantee. Okay, so you need to be prepared. If it breaks such resistance as an all-time high, and it never move much further upside, you should be ready to make a cut loss, okay, or stop loss to exit the market. So the stop loss here should be less than 10%, cannot be more than 10% whenever the price break above the resistance as an all-time high or break the 52-week high. That is very, very important. Okay, very, very important. As you can see here, if you keep on holding the price, if you don't have a stop loss set in your mind, less than 10% of stop loss, this thing could happen. Okay, a gap down could happen. So you must be ready to cut loss if the price action does not move as intended. It's normal in the financial market, in the trading world, that some of the technical analysis or the fundamental analysis may not work. Okay, it depends again what happened around the 2016. There is, you need to understand. That's why it's very important for you to understand and know what's the sentiment and the catalyst at that time. Okay, at that time. But as you can see here, there is a new resistance created here. So you plot that one. Whenever it breaks such a resistance with a volume, it just continue on to make such a move. So that's very, very important that you need to understand, you need to view the chart, what clues that you need to see First things first, you need to be able to plot down where is the resistance, where is the support, okay, and then you need to understand how the price action move, okay, how the price move when the price, as I mentioned earlier, when the price break the resistance, it must be associated or it must be supported with a higher volume, okay. And if it didn't work, be ready be ready to exit the market with a stop loss of less than 10%, okay. So that's it for my sharing today. What's more important is what is the important elements to see on the chart for you to be successful in the trading world. Not just in the stock market, of course, you can trade the support or resistance techniques on all other financial markets. Okay. All right. Until then, we'll see you again on the next episode of Wall Street Stock Market Education Series. Thank you, and don't forget to subscribe this channel and share with others as well because it's free. Okay. All right. Thanks, guys. See you again next time.